Welcome back to the Florida Senior Group here in Chicago. I'm Killer. Happy Halloween, or maybe not, folks. This market is a little bit spooked, obviously, over the situation developing in the MF Global. And let's drill down that for 1 second. This MF Global situation currently is a $6.3 billion bet right now, and the net worth of the firm is actually $1.3 billion. I think that exposes the fact that maybe MF Global is not the only one, despite the fact that it's a very small company. We're looking at the lever they're using here. It's a 6-to-1 over, net worth here. So it's a really big lever up, and now we're seeing that exposure to this sovereign debt, which we have talked about here in the CMZ forever. But now we're focused on Italy, folks. Last week I talked about the Italian bond, that 10-year note going over 6%. So it kind of comes back off this euphoria we've seen in the market, but I've always had a little caveat on this euphoria. I've been talking about this 2.28%. It's been a great lid. Well, despite the fact that it tried to hold on as long as it could, as soon as that rally came in and euphoria hit the market, they blew through that. And as soon as they got above 2.28, we flew up to 240. But currently, we are seeing, the yen obviously intervention from Japan. We saw Japan pop in the market. That actually was the catalyst to get things going. But the MF Global situation really is underscoring the fragility of the market. And are there other companies, are there other firms out there that highly levered to the European debt? I think the answer is yes, no doubt about it. So we're actually going to see now this focus on Italy, the 6% 10-year yield that they had last week. What does that do? Because when they implement, and if they can implement this Italian austerity, we're going to see all of that, cut, all the monetary cut in the austerity program get gobbled up and negated due to the fact that the borrowing costs are so high. So I think this is really exposing a crack in this potential recovery here. I think the EU has to be very careful here. They came up with some broad solutions. They need to deliver specifics. We need specifics going into G20. I think we're going to experience extreme volatility up until next weekend, but we need specifics. We need implementation, folks. It's all about implementation. Because right now, people are really, market participants across the globe are concerned about Italy. And guess what, folks? What's behind Italy? Spain. So there's a lot of moving parts here. We're currently seeing this S&P under that 200-day moving average of 1272, 1273. It's on its lows right now. The euro currency obviously got whacked overnight due to the Japan intervention. And we're seeing this grab for treasuries. A 2-point grab in the 30-year and almost a full point in the 10-year and about a 3-point grab in the Ultra bond. So we have no auctions this week. We do have some very important data at the end of the week, the jobs number. If that is weak, and this is coupled with the European fragility right now, we could really see this move. So right now, as long as the 10-year is under 2.28%, I think we're going to see more shoes drop in the MF Global vertical. Therefore, that 10-year has a possibility going back under 2% here, folks. When the market gets spooked, they come and grab these treasuries in the pits behind me. So we'll see if this comes to fruition this week. Here all week. Hope you guys have a great one. One other thing you have to remember, be the hammer, not the nail.